Welcome to the Weekly Juice Podcast, where we discuss all things real estate, personal finance, investing, entrepreneurship, and the many ways to achieve financial independence. We interview accomplished investors and entrepreneurs with the goal that their stories inspire you to take control of your financial future. Here to get your creative juices flowing while also documenting their own personal investing journeys are your hosts, Corey Jacobson and Ryan Bevilacqua.
Welcome back to the Weekly Juice. As always, it's your boys Ryan and Corey here with another episode. Today we had on Coach Chad Carson. He is a real estate investor out of Clemson, South Carolina. He actually played linebacker at Clemson and then, moved into an entrepreneurial life and became a real estate investor. He is the author of Retire Early with Real Estate and his new book, The Small and Mighty Real Estate Investor. Both are published by Bigger Pockets. Chad was one of our very first guests on the show, episode 23 back in the day. If you've been following along, we're at episode 176.
I think Chad's 175. Yeah, you're right.
So I say this, he was the first bigger name to take a shot on us and come on our show and give us the time of day. Fast forward to today, things have been going smooth for 4 years, but he also is one of the first guys we've had. We almost consider him like a virtual mentor to us. We followed along on his YouTube channel. He taught us how to analyze deals, have the wherewithal to go in and actually buy our first deal. He coached us through our property that burned down. And when I say he coached us, we just studied his articles, his YouTube channels. We've met him a couple times, but he has been one of the most influential people to us personally on our journey. So we wanted to bring him back on the show, talk about his life 3 years later after his first time on the show. And a lot has changed, but he has still remained the same awesome dude.
Yeah, I really love Chad. He was somebody that I read his book and I was like, oh, it'd be so cool to try to talk to this guy. And then we ended up happening, it's amazing what you put out in the universe. But he is just a quintessential dude that is doing exactly what you would likely want to do if you start going into real estate investing. He built a portfolio of 100 units and then has basically taught everyone how to take these little mini retirements along the way. So he's like, why wait until you're 60, 70, 80 to retire when you can take these clarity breaks and travel to Spain and South America and take not just, 2, 3, 4 weeks off. He's taken 6 weeks off. He's taken a year off. He's taken a year and a half off, spend time with his family. And his biggest thing is doing what matters. That's Chad, and he has a podcast. He talks all about it, but doing exactly what he wants to do when he wants to do it. And that's why he got into real estate. And the whole thing is that he's a coach. He came from the sports world, so he has a lot of great sports analogies. And I just like listening to him because he's so informed, but also you can tell, there's people that when you listen to them speak, you can just tell that he's a good person. And we try to only get good people on the show. But Chad's guaranteed one of those.
Guaranteed one of them. He really talks the X's and O's. There's a lot of fluff out there, I will say. You guys probably hear this, you're like, oh man, this guy's a guru, or he, they don't really know what they're talking about, or you check them on their numbers. Chad really will walk you through step by step, and this is through obviously all his education on YouTube and his books. But I say the X's and O's tongue in cheek, right? It's kind of like talking to a coach. But the 1, 2, 3, 4, do this, and then you'll reach that success and you'll be done with it. So for us, we used his books as a handbook or a guidebook, like a little mini Bible, the way it taught us to invest in real estate. But I don't know. We could talk about Chad all day. We kind of gassed him up throughout the entire episode because
great.
He's just so awesome. And I don't think he knows how awesome he is or how influential.
We told him a lot in the episode, so I hope he knows now.
Yeah, I hope he knows now. But without further ado, let's bring back in Chad.
Let's do it.
When you have investment properties and tenants, you need a good system in place for collecting rent to make it easy as possible. And Rent Ready can help you with everything. When you sign up for Rent Ready, you can start adding your properties, inviting tenants, and creating charges. You can even set up automatic rent reminders and create auto late fees as well. For tenants, they can pay via ACH, card, or even cash using Rent Ready's web and mobile apps. They can also use an automatic payment setup and sign up for rent reporting so they get rewarded for paying rent on time. Rent Ready saves you time and hassle by automating rent collection, and you can manage everything from one dashboard. For our Weekly Juice listeners, Rent Ready's given us a special 50% off for any Rent Ready plan using our code WeeklyJuice at rentready.com. That's RENTREDI.com using the code WeeklyJuice. That's WEEKLYJUICE to save 50% off any Rent Ready plan. Chad, officially welcome back to the Weekly Juice podcast. Corey and I are so excited to have you on the show, man. We talked pre-recording, but long time coming, and we are just so thrilled to interview you. So thanks for coming back on.
It is great to be back on. I enjoyed the first one, but it's been way too long. So thanks for having me back.
Yes, absolutely. I want to preface this for listeners too. We had Chad back on, and probably like 3 years ago. He was one of our first.
I'm going to look it up while you're talking because I really want to know.
Yeah,
I think it was like episode 10, like all the way back then.
Find the exact number, but I want to bring this up for a reason. So in beginning of COVID, we decided to start this podcast. It was Corey's idea, and I was like, we started going back and forth, and we did about like 5 or 6 episodes, and it was about like teaching people how to invest in real estate and like study personal finance and get your financial picture in order, and like our journey into inception. Then we stumbled across Chad's book called Retire Early with Real Estate. We read it and we were hooked, and we said, hey, we need to start investing in real estate. Fast forward a couple of weeks, we decided to have the guts to reach out to Chad and see if he'd come on the show. We had no big names within the community on the show before, and lo and behold, he said yes, shockingly. And it was, what episode was it?
It was 23. So it was in September of 2020.
So, okay, so I say this, it was the Jordan number, so lucky 23.
Yes.
We had Chad on the show, and Chad, so that was a lot of back-end information, but we wanted to bring it up to basically say, thank you for joining us again. You are one of the reasons we got into real estate investing. We would not be here where we are today without you. And you're one of our like virtual mentors. We've not officially met in person down in South Carolina, but you've taught us more than you know. So it's an honor and a privilege to have you back on.
Man, that means a lot. Thank you. I just really really enjoy hearing that, and can't wait to talk again.
Cool. So let's do it. Okay, so let's dive in here. I want to chat a little bit, maybe pre-real estate for you. You have a cool story about college and things of that nature. I don't want to spoil anything, but if you could maybe take us back pre-real estate, and then what set the light bulb off in your head where you're like, hey, like this is something I can see for my future and how I want to build, generational wealth for my family.
Yeah, the quick version was I was in college, and I got a scholarship to play football in college. So that was kind of my deal. Going to Clemson University, I was a middle linebacker. And when I got done, I thought for like a moment in time that I might go to the NFL. That bubble got burst really quickly. And so it was like, all right, that's not going to work out. And I was deciding what to do, kind of like everybody does in their, early adulthood. And I was going to go either the traditional route and like go to medical school was kind of my thing. I was a biology major, or maybe work for another business. But this third option was like be an entrepreneur from the very beginning, never work for anybody else for the rest of my life. And I took that route. I went into entrepreneurship, flipping houses essentially. And so there's a lot of fun details to that, but the kind of the big picture was a business partner and I got into it together. Neither one of us had any experience or money. I was lucky enough to have a family member who was in the business. My dad had rental properties back in Atlanta, Georgia. So I learned a lot from him. But then I went off on my own at 23 years old with my business partner, who I'm still business partners with today. And we had a fun time, like a lot of roller coasters and cash flow during the early years. But at 23 years old, I could live in the back of my Toyota Camry, which was paid off at that point, and I could live in a tent. So it was not like that. It's challenging as some people have probably when they have a family, they have obligations. I didn't have any debt from college, but it was exciting. And I got into it, flipping houses, and eventually started getting rental properties as well. And that's more what we do now. We have a portfolio of buy and hold rental properties, the income from those and the relative passivity of those, not having to work a ton of time. Like these days, it's about 2 hours per week, managing our managers and managing the properties come from a distance was eventually what let me in my 30s be able to travel, study, do other things. And I still do real estate, but it was kind of intense in the beginning and then more of a passive investment over the long run.
Well, I think that's the goal, right? You kind of hit that financial independence. You did it through real estate, and your book, Retire Early with Real Estate, which was which was your first book that you wrote. And you have a new book that is out now that is The Small and Mighty Real Estate Investor. Sorry, I had to look down because I thought it was small and mighty real estate investor. But I wanted you to talk about the differences in the books, but I also wanted to mention that us reading that book, really the number one thing that helped us, maybe me specifically when I read it, is that you had testimonials in there. And I think that putting that in the book of 12, 15 people that have already done it, who are on their way, really was like painted the picture for me personally. I was like, well, if these people can do it, and I don't, no disrespect to any of them, but I'm probably as smart as them, I would hope. Like maybe I could do this too. And that was amazing for me to read and listen to Sally from New York and this person from LA and wherever coming together and sharing the story about how they were able to retire early. And I think the retiring thing has shifted for a lot of people because in 2023, it's a lot harder to retire than maybe even in 2009, right? But I think the focus on doing what you want when you want and the importance of time freedom. So maybe talk about your new book, and then we'll go back and talk about kind of the journey to get there. Let's talk about, what made you write a new book after the first one was so successful.
Yeah. So the second one is called The Small and Mighty Real Estate Investor, as you said, and it's really more of a mission book for me. And I love the idea of the testimonials. Like, to me, the story is what always teaches. Like, as human beings, like we do learn facts, we learn information, but it's always the story, at least for me, that's stuck with me. And The Small and Mighty Real Estate Investor is partly about my story, but it's partly about a story I wanted to tell within the real estate investing and the financial independence community, which is you don't have to go really, really big in order to have a ton of freedom. In fact, going big actually might get in your way of being more free. I try to make that point. And I tell a story at the beginning of the book. I'll summarize it. There's a few real estate investors that met on bigger pockets. They're going on a trip to Europe. They've been friends for 15 years, and they all kind of took different paths. And the first two couples had simple portfolios. One had 10 properties, the other had 50 units, but they were all like in one location, kind of. So they had grown up, but they kind of maintained what they had for a while. And the third one was the most successful financially. Got into syndications, had thousands of units, was making like almost $1 billion per year. Great, right? Like, all of them had good money. But they went on this trip and they wanted to extend the trip. They're like, oh, this is great. Let's keep on going. And the third couple, what happened to them? Like, they had plenty of money, but they had obligations back at home. They were growing. They had a team. Somebody had quit. One of their team members had quit. They had to go back and take care of that. They had some projects that needed to be done. They needed to go talk to people to raise money. The point was, like, they had a lot of money, but they didn't have these other currencies of free time and flexibility. And I would add like peace of mind, just simplicity to know that you can do whatever you want. And so that's kind of the main story of the book. And then I go into, how do you build a business model that actually accomplishes everything you want financially, but also has full bank accounts of time and money and flexibility, or time and flexibility in addition to the money. And it's definitely a fork in the road. I found, that I went down that fork. I kind of followed the go big or go home kind of mentality for a while. And there's nothing wrong with that. Like, I have friends who do that, and I'm glad we have the Elon Musks and the people in the world who do that kind of stuff. But my message is for the people who say, you know what, I like real estate investing, but I don't want to have another job. I just want to have the income coming in, and I want to have the flexibility to coach basketball or go on a trip with my family and live somewhere for a year. Or maybe I want to do that for a season, and maybe I want to grow bigger later on. But the business model that's worked for me, that I detoured early in my career because I realized the risk of it. I realized the hassle. I just realized going big wasn't my style. And so the book is basically kind of sharing my business model, how this has worked for me and my business partner. And then, of course, a lot of stories in between. Here's how this person did it. Because every story is a little different on how you apply it. But the core message is, go small or go home. Like, keep it simple. Don't try to have the biggest portfolio possible.
Got it. That's awesome. A couple questions to go off that. Maybe for people that don't know you or your story, what does your portfolio look like now? And the reason why I asked the question is because I want to know, what does small actually mean? Like, right? What does that mean for somebody who's listening, who's trying to achieve small, that has built a simplistic lifestyle where you're able to live in Spain for an X amount of time, or you were in, I believe it was Argentina, correct me if I'm wrong, but you were traveling all over the place and doing exactly what you wanted to do by doing this and then writing a book about it. So what does small look like for you? And I'm sure it's defined differently by everyone.
Yeah, in the book, I define small in the small and mighty because this is a loaded word, kind of like retired, it means different things to different people. But for me, small in the small and mighty means having the least number of properties necessary to accomplish your goals. And so it's really an orientation. So like typically the mantra is get the biggest, go big. Like if you're not going 10X, you're not doing enough. You're not proving yourself. My message is like, go as small as possible. That could be a lot bigger than what other people have if your goals are bigger or if your properties are smaller. Like in my case, my business partner and I have around 100 units, which is 33 properties. And so my half of those, you can kind of think of it as like 16 properties, about 50 units. And honestly, I would rather be smaller than that. Like I think over the years, we're going to whittle that down a little bit. But it's just sort of a place we've settled at that works for us. And we still have a little bit of leverage on those properties, but we could probably sell some of those and pay off some more debt if we wanted to. But we're in a good place. But so I'm kind of like the biggish side of Small and Mighty. But I share stories in the book about, and I have a friend named Jillian Johnsrud. She's out in Montana. She has a family with 5 kids. She and her husband go on trips every year. She has 2 properties, and they produce.
Yeah, we interviewed her on the show, actually.
Oh, perfect.
I think it was maybe from your recommendation about a year ago. So it's funny that you mentioned that. Yeah.
Yeah. So Jillian has a similar lifestyle. She has some other investments as well, but she has 2 properties as opposed to what I have. And so there's a whole spectrum in there. It really is a personal decision. And it also is a market-based decision on how many properties you need. But that orientation of saying, I'm going to get smaller potentially instead of trying to get the biggest possible. And also, like, as you grow, the speed of your growth is another thing. It's like I was going fast in the very beginning. And there's always a season for pushing and hustling and growing. Like, I think that's important. But the message I try to get across in the book is that it's like you're climbing a mountain. And you would never want to push straight to the peak of the mountain. You'd want to hit some plateaus and you want to take a break. And so there's this pace of business that sort of gets pushed on us a little bit. And I'm trying to push back and say, you know what, like, take a mini retirement, like take 6 months off, take 2 weeks off, like take a break. That might mean you make less money in the long run. It might not actually, but it might. But who cares? Like, remember those multiple bank accounts. Like, if you have enough money, but if you have a ton of money, but you don't have time to do the things you wanted to do in the first place, like, what's the point? And why wait until you're in your 60s, your 70s, your 80s to try to enjoy those things when you can, like, mix that enjoyment of life, like, throughout your climb and throughout your, like, different levels of financial independence.
Yeah, I think that's really cool. So you're kind of speaking directly to us. We're at I wouldn't say like maybe it's not a crossroads, but maybe like a mini impasse where we're like, do we start going bigger? Right? We have a small portfolio amongst ourselves, but we've really gotten to the larger syndication space, raising capital, partnering up with other people, and we're GPing a few deals, and we'll continue to do that. But for us, we're using that active income, if you will, to pump on the refis or the sale back into the long-term portfolio, right? As you mentioned, maybe we'll cap out at 50 units. We haven't really decided on our number, but the reason I'm bringing this up is because a lot of people this is a very specific message of staying small, right? And we've also said, hey, you can go big as well. So it's we're kind of looking at it as a happy medium where we can kind of like just keep recycling the cash into different deals. But my question for you is, and I was talking with Corey about this pre-show, actually, we're talking like, at some point, you're going to have enough reserves in your long-term portfolio bank account to start living off the other dollars, right? And we haven't done that. We've just started. We have a pretty big sum. I wouldn't say massive, but we only have a small portfolio. We've covered that. We have about like 6 months of expenses, right, covered in this portfolio for each of those properties. Do you have a baseline number where you and your business partner were like, hey, listen, like, the portfolio is good. Now we can start using this money and living off it, because for us, we still have our W-2s, and like, that is our, unfortunately, right, golden handcuffs. But in a way, it makes us feel good about we still have dollars coming in as we build this portfolio to cushion. We're still bankable. So there's a lot there, but we really haven't touched any of the dollars in our portfolio. So I'm wondering if you could talk to the point where you and your partner decided to do that.
Yeah, this is a really good point. Both to your point about syndication and your W-2 income, like, the way I would explain it, and the way I explained it in the book, is that all of us as real estate investors, we go on a journey, and you could think about it in like 3 stages. Like, the first stage is like a starter phase where your job is just to get a first deal done. Like, I remember you guys like buying your first, with a duplex, right? Or a multi-unit property.
Yeah.
Get that first deal under your belt, learn as much as you can. It is about making money, but it's more about, just learning, like getting your confidence, getting your network. And so that's like, there's a different goal at the starter stage, and you usually have very little money as well. So you just have to be scrappy and just do whatever deal you can do, house hack, partner, whatever, right? So that's starter phase. And then you get into this wealth building phase, which is the longest phase. It is typically what most real estate investors think of with the most of the advice you get. Is your goal is just to take the whatever amount of money you got. If it's $100,000, if it's $50,000, and turn that into $1 million or $2 million. So it's really an equity growth game. So you guys are right in there. Like, you don't want to touch your cash flow when you're in the growth game, because you want to recycle 100% of that as much as you can, tax advantage, and then buy more properties and buy more properties. Now, so that makes sense. Probably most people know about that. The third phase is the part that I don't hear enough people talking about. And I tried to really put all three of those phases into the book and show how you go through that journey. In the third phase, I call it ender in the book. There's a guy named Pete Fortunato who I learned a lot from. That was his term. I'm a little hesitant to call it ender because you don't end your career, you don't end your life there, but it's more like a harvesting phase. And I also compare it to sports, like you guys, being in sports, it's like you're in the fourth quarter of the game and you're winning big. And so you get to this ender phase, you're winning, like you built a lot of wealth, right? And so in the extreme cases, when I played football at Clemson, if we were winning and like a minute to go in the game or 2 minutes to go in the game, but we're on offense with the ball, we would just take a knee. Like we would just like put our knee on the ground and say, we're not going to make a mistake here. Like there's no way we're going to take a risk. We're just going to lose a yard or two because we're going to win the game, right? If you were in your 60s, 70s, 80s, like if you just knew you never wanted to work and do any active income again, taking a knee financially would make a lot of sense when you get into that ender harvester phase. So like the equivalent of taking a knee would be paying off all of your debt. Like don't have any debt, because why would you risk something you already have, this equity, for something you really don't need? Like it makes zero sense. That's a quote that Warren Buffett says. Warren Buffett always says like, it's insanity to try to risk this wealth that you already have by taking a little bit more risk, getting a little bit more debt to get a couple returns, percentage points of return, but you might lose it all. Like that makes zero sense. And so like taking a knee is one extreme, but I'm not in the point in my life. I was in my 30s when I kind of had to start dealing with this. Like I'm not going to take a knee for the rest of my life. That'd be like taking a knee in the second quarter of the game, like and just try to ride it out. But there is a change in the strategy. So that's what I try to show in the book. Is like when you reach this point where you do want to start living off the income, or you do, to use a poker metaphor, want to take some chips off the table, you change your strategy a little bit. And one of the specific strategies in real estate, which is kind of sacrilegious, is I think you start paying off debt. I think you start selling off some of your extra properties perhaps, and using sell off the ones that maybe aren't your ideal properties. Maybe you cash out of a syndication or something like that, and then you use this big chunk of money to plow back to pay off some of your other properties. And you can combine that with like a debt snowball or some of those traditional kind of personal finance ways to pay off debt. And that's what my business partner and I did. And we sort of stumbled upon it, but it was a really cool move because we had $100,000 saved in the bank at one point. We're like, wow, this is amazing. But since we never had $100,000 in the bank, and we could have reinvested that in 4 more deals, like put 25,000 down. That's the traditional growth strategy, right? But we were looking at one of our properties that we'd owned for like 10 years, and the loan that we had been paid down to like $100,000, and it was now worth $250,000, $300,000. So we had a ton of equity, and the payment on that loan was $1,000 per month. So we had $100,000. If we were to pay this loan off, we would free up $1,000 per month, or $12,000 per year. And if you look at that like a cash on cash return, that was like a 12% cash on cash investment. I know it's exactly cash on cash because there's some principal balance in there too. But from a cash flow standpoint, which we were interested in that point, we could free up $12,000 per year. We could reduce our risk because we now don't owe any debt on that property. And we don't have to go have another property with extra hassle, with extra tenants, with extra, maintenance issues. Like it made a lot of sense to start doing that. And so we've like progressively been doing that. We've kind of gone through some phases, regrowing a little bit more and then paying off some debt. But we've gone from like, instead of having a 60% or 70% loan to value portfolio, we have more like a 15% or maybe a 20%, somewhere in there. So that's been the journey we went on. And so we have some properties free and clear, some with some debt on them that are long-term debt, but that's playing the different game. That's the game that a lot of people don't talk about, except for Warren Buffett and people like that. But it's a really important message and a really difficult stage for people who've been in the wealth growing phase. And I speak because I know this personally, to actually change the game you're playing. It's really difficult to do because you've been in this mindset for so long, for many years sometimes, of just growing, where that's the only thing that matters. And there's actually other things that matter though: risk, time, flexibility, those things we talked about earlier.
You were the first person, Chad, that taught me the framework. If you had 20 rental properties and you had them over a 10-year time frame, maybe you have 6 or 7 of them with 30% leverage that you might have just bought, 6 or 7 with 30 to 50% leverage that you've maybe could take it refi, and then 6 or 7 with zero debt, right? And that's your 401k. And I heard that from you in your first book. So I love that. But I want to talk about a framework that I think is really difficult for people to latch onto. And you know this because you've been on both sides of it. the skills and the hardwiring of your brain and the muscles that it takes to build financial freedom puts you on a path for never stopping, right? That's what it does to your brain, because if you have the skills and ability to become financially free, the skills and an ability to reverse that and slow down and take a break and to go on vacation and to take a mini retirement, it seems like it's an impossibility, at least for me. And I want to know what you've done or what advice you would give for people that are trying to do that. And the reason why I asked the question is because Ryan and I just raised, this is just so us. We just raised a significant amount of money for an 18-unit deal. And we have a significant general partnership in the deal because we're doing more than capital raising, but we brought a lot of money to the table. And our first reaction is, all right, when's the next one? And it's like, we would never celebrate that. It's just like, I don't understand why, but we haven't even thought for 1 second. Like, we were like, yo, good job. That was it. And you actually were like,
dude, I'm sorry. Like, I feel like we just didn't do enough. And like, we did enough, dude. Like, it was really fun. So the reason why to bring it up is because you can tell, I don't know if we're capable of mini vacation or mini retirement. I would love a mini vacation. We don't even do that. Just talk to me about what the mindset shift and how you're able to accomplish it.
Hey, the challenge is real. Like, I'm with you, man. It's almost like we're in a circle and saying, hey, my name is Chad. I'm addicted to ambition. Like, my name is, like here I am. Like, so there's nothing, I don't know, like it is what it is, right? Like, I think we're all hardwired a certain way. Like, we could get into the psychology of it, why we are and how you change that. I'm not changing my ambition. And I've had a lot of conversations with my wife about this. Is like, I'm an ambitious person. Like, I feel like I was put on this earth to go, like, to do things, to make things happen, to lead, to do this stuff. So the other thing is you don't have to give up your ambition to grow your wealth forever. Like, this isn't like, sit on the sidelines and you're never going to play again. You can set up what I call an income floor. So it's essentially, you could take part of your portfolio. This is what my business partner and I did. We said, this is the part of the portfolio that's almost like a fortress. Like, we just want to make sure we don't slide back down the mountain. We want to have like some debt paid off. We want to have more income. We want to focus on quality of our properties. But that doesn't mean that that's everything. But like, what you might want to do is say, like, let's make sure that income portfolio, that income floor, is something that can cover our basic financial independence number, maybe even our normal financial independence number, so that, like, if you didn't do anything actively, you'd still have this. There's a guy out in California who I learned a lot of this from, and I've never met him, but he's just an inspiration as an investor, named Mike Cantu. And he's out in Southern California. He's a wholesaler. He flips houses. He's good at that. I think he's still doing that after like 3 or 4 decades of doing it. But he went and paid off a portion of his real estate in California. And he looked at each property he had. He was like, okay, this property produces $1,200. That's going to be my insurance property. And this property over here produces $1,500. That's going to be my groceries property. And so he would actually, like, literally, like, that property has a job. That's the job description. And I wanted to do that for the rest of my life, so that I never have to worry about that. And so that's what I call an income floor. And so here's how, like, going back to your question though, is like, how do you have ambition? The only difference is that you're taking some of that money that you might reinvest in growth and you're plowing it back. You're making sure you have this floor that you're never going to go back on. And then, like, it's wide open. Like, the rest, especially you guys are young. I'm young too. And no matter what your age is, like, now the question is, like, what do I want to do the rest of my life? And I'll challenge everybody listening to this, because this is something I challenge myself with. You might not think you have enough imagination, or you're like, what would I do if I weren't growing? Just give yourself some time to think about that. And a mini retirement, to me, is like the perfect opportunity to do that. I did my first one in 2009 in the middle of the Great Recession. We weren't financially independent, but we went to Spain and South America for 4 months. And it took me 6 weeks. Like, literally, my wife and I were sitting on a little coastal town in Spain outside of Barcelona. We sat for like 6 hours looking at the sunset of this little coast. And it was like 6 weeks after I started that trip before my chest, like, finally, like, just relaxed. Like, because I was hardwired, man. I'm just tight wired. And it took something like that for me just to step away from it, not to lose my ambition, not to say I'm not going to grow anymore, but to say, like, what matters to me? Like, what direction do I want to go in here? And for me, part of that was, we want to still keep growing some in real estate, which we did. But it was also like, hey, this, like, education thing and teaching. And so I found some other passions that were really important to me. But I think in life, we get so focused on what's in front of us that we don't have time to ask ourselves that question that we used to ask when we were in our teens or in our early 20s. Like, what do you want to do when you grow up? Like, what do you want to do with the rest of your life? And financial independence at its best is an opportunity just to do that. It's to pivot in the middle of your life, later in life, and say, I have 100% flexibility with my time. Money is not an issue anymore. I don't have to make money. If I want to do something that makes money, great. But like I've done stuff, like I started a nonprofit in my town because I'm really passionate about the fact that you can't walk around the United States in most towns without getting run over by a car. Like our pedestrian infrastructure sucks. Like it's horrible. And so I was like, who's working on this in my town? Like, and they're like, nobody's doing anything. I'm like, that sucks. Let's go fix this. It's been frustrating. It's been hard, which is entrepreneurship, right? But in 2014, a group of us started that. And now in 2023, we've raised several $1 million. All the city councils working on it with us. We're getting trails built. And so we're getting a infrastructure of like walking and biking paths built in our town. Like I never expect to make a penny from that. I don't ever want a penny. I want to put money. I've been putting money into it, but that's the kind of stuff you could do. Like there's problems out there. There's things that need to happen. There's family members that need help. I mean, there's all sorts of things that I call that doing what matters, that need our time, that need our flexibility. But until we like take the space to like ask ourselves that question of what I want to do with my life now, we never give ourselves permission to actually do those things because they don't make money, because they're not the like grow type of stuff.
Yeah, it's kind of like that whole teaching old dog new tricks thing. And, you know, they say that like the older that you get, the more potentially stubborn that you get, or more like stuck in your ways, I would say. Stubborn is maybe not the right word, but stuck in your ways. And I think that sounds like a great way to combat that. Like if you can take time incrementally to go think, or to go just take breaks, and what do I actually want to do? Like to reroute your life. I think that is hugely important. I think that a byproduct of COVID really was that for a lot of people. Like we wouldn't have started the podcast if it wasn't for COVID. I wouldn't have even found how much I enjoy talking to people and teaching and mentoring and even just conversing and networking the way that we do if we hadn't had that break of like, well, what is it that we're doing? What is it that I want to do? And I think that what you don't want to do is be in your 60s or 70s and be like, damn, I really should have done this thing that you might not even know what it is because you never took the time to think about it. So I love that. And I think I'm telling it to myself now that the breaks are needed. And it's like, and I said this to one of my mentors told me, and it was just about children, like having children. He's like, dude, what? Like you want another 50 grand in your bank account, or you want another, like, what difference is that going to make to you? Unless you have nothing, right? But like, it's not going to change the way that you raise a child or the way that you do anything really. So it's a hard lesson, but I want to teach it to myself.
It gives you options. Money gives you options.
Yeah.
Use it as a tool, right?
Yeah.
I mean, and for most people, I would say, I can't put a number on it, but for the vast majority of people, they are looking to escape their W-2 jobs. And I say that tongue in cheek, meaning the idea of having to clock in or to report to someone else and not be in control of their own time because it's finite, right? I think that's like the real challenge most people have. And then they think money will solve that, right? It does to a certain point, but if you're not pumping that money into something like an income producing asset, it's just going to run out eventually, and you're going to have to go back. Even if it's not that same job, you're going to have to find another one. And so I think it's funny, throughout all these conversations, we're all like seem to be going through similar things in different stages of our lives. That's what makes it so exciting. And as humans, we think a lot alike, and we've experienced certain things, and contact will be made. I think that was one of the things, is like, just things happen all the time, and just be prepared for them. So I want to bring this up. We mentioned, I kind of sneakily brought it up to you before we started recording, but another one of our learning moments here through our journey. You taught us and coached us through it, whether you were in Spain and we didn't even talk to you. So it came through listening to one of your podcasts. That duplex you referenced that we bought, that burnt to the ground. So we had a similar situation to what you had at one of your properties. Not the exact one. I'll let you talk through it, but I want to talk through kind of what happened to us just briefly. Just people, we did an episode on this, but long story short, we got a call 11:30 at night, ended up missing it. We were both sleeping, woke up in the morning. It was one of the tenants that called and said, hey, my home is on fire. I'm like, oh my God, like, what do we do? Basically, before going through all the motions, we quickly went on Google.
There was no one with any information besides you.
Yep.
And you had to step-by-step.
What was the first name that popped up had to deal with a property fire? Coach Carson. We were like, dude, 5 a.m, whatever time we woke up and saw this, we immediately turned it on. we have to go through the I drive past my W-2 job to get to the property. And so the property's like another 30 minutes away. And I'm like, there's no way I'm going to work without at least driving to the property, checking this thing out. I got to go see what's happening. So I listened to your podcast on my way down, literally like, I shouldn't say this, but like mentally taking notes, right? As much as I possibly can, maybe a couple of my notes app. And I'm like, I'm driving down there. I finally get there and I see this place. I'm like, well, maybe it's not going to be as bad as I thought it was going to be. Corey and I are trying to talk ourselves off the ledge. It's fine. Maybe it's just the siding. Just the siding, maybe the roof a little bit. Get there, like trash. Completely. And long story short, the place it was a complete overhaul. They had to they're going to have to knock it down. But we go through the motions. I'm listening to your episode, and it's teaching us who to contact at what time, what steps to do this. And we finally go through the motions of all this. And we're like thinking, how can we possibly be going, can it get any worse, right? Like they tell you, go into real estate and you think about this, and I'm bringing this up to people listening. It's like, if you're going to get into the game, just expect things to go wrong. We were like, the worst case scenario, house will burn down. Probably won't happen, whatever. And it did for us in the first couple of years of investing. So I'd say that because if you can get through this, you can get through whatever. Like things are going to happen. You just got to, you mentioned this too, like half of it's the journey and you learn how to overcome things and go through it. And so I just wanted to, first off, let you know what happened to us. And thank you for the guidance again, man, because no one had that out there. You had like the guide on how to navigate a property fire. So it was amazing.
Well, having gone through it, I'm sorry you had to go through it, and I'm sorry for your tenant too, because they're the ones who have them. They're the ones who put out the most, and losing their home, and a lot of times their personal stuff. So it's a traumatic thing, right? But I went through that as a landlord, and we had a property manager who handled it really well. I was really lucky and happy for my property manager. They took care of the tenants that we paid for, but they did it, like buying them food that night and finding a hotel for them to stay in. So it's real, right? But the fact that you guys found that episode, like when I went through it, I'm like, all right, I don't know if anybody's ever going to listen to this, but I'm going to like write it step by step like I always do. And like, I'm really happy that you actually, so probably other people who've benefited from it too. So I guarantee it's really good to hear.
100%. I'm going to say coach. I'm not going to call you Chad. You're a coach. You're literally our coach. Yeah. So this is really funny. I'm a big YouTube University guy, and Corey and our producer are probably sick of hearing me say this, but I'm a visual guy, right? I learn everything from, like, I just need to see it, and then I can tackle it and move on. That episode is just one small piece of the amazing things that you're doing online. I just say this to, like, whether you know it or not, like, you could be doing 5 other things. You could be in Spain. You could be doing whatever. Those YouTube videos you put together and the walkthroughs, like how to analyze a property, how to navigate a fire, how to do this, they all are so invaluable, and people are learning every single day. Like you might see a couple of views go up, but the fact that it changed our whole portfolio and our lives. And like, so I just want to thank you for everyone else, because those little things you're doing along the way, while, growing your own wealth and doing, everyone's got their own problems. You got your own happiness too. Like, thank you for giving back, because a lot of people charge out the butt for that. And to be able to go quickly learn and pick up the pieces within an hour was pretty cool.
Well, not only that, Chad, but it also, I think you not made us, but the moral of this whole story is we're actually going to have to pay capital gains because of how much of an insurance payout we got, which saved us because of the documentation that we made on it. And I was on this insurance company, like literally, like if they told me they were going to call me today, like they're getting a call from me if I don't hear from them, like that type of thing, because I know how it gets. And I was stressed, but I had the notes. Like I had everything written out, what timestamp, photos, all of this. Like nobody could tell me that I didn't have this thing buttoned up. And, fortunately, unfortunately, everyone will look at it. Nobody was hurt. Well, I mean, that's fortunate, but everyone had renter's insurance. But the neighbors actually set the fire. So there was no fault or anything like that on us. So like the fire started in their garage, which led over to our house. So the insurance process was a little bit smoother for us because the cops got there and they documented, and they're like, clearly, like this had nothing to do with your tenants. So there's no like fault going back and forth. And our insurance coverage was higher than what we owed. So we ended up working out, but those early days of not knowing what was going to happen was really important. So thank you. What I want to get into now is, I know that you started your portfolio, well, I guess you could say a while ago at this point, right? Like you've had it for years. So knowing what you know from back then, now, like if you were starting, if people were listening to this, say, I want to build a small and mighty real estate portfolio in 2023 going into 2024, there's nuances, there's changes, there's differences. what would you recommend if people were starting and maybe they do have a couple properties? Like, for example, we bought properties in 2019, 2020 that those numbers don't even work anymore today in 2023. Like, we can't get the same thing. So we're on to a little bit bigger things. Like, we're not trying to buy single family anymore, but maybe there are people that are. What would you recommend knowing what you know now?
Yeah, it's kind of like sports. I keep going back to sports metaphors because I know you guys understand that too. That's how my mind thinks. But it's like the fundamentals of real estate haven't changed just because the interest rates have gone up. It's sort of like you're just playing in a different venue. Like if you were a basketball player, like now you're in a place where the wind is blowing from the right instead of the left or something. You're out in an outdoor court. Like that's kind of the way interest rates are. Like the fundamentals of real estate. If you boil the entire business down, it to me is like two factors. Number one, buy quality properties. And we can define what quality means, but like properties that are going to produce a profit for you over the long run. And there's different ways to make profits, but basically two ways that I like to focus on. They're either going to produce income and make you income, cash flow, or they're going to grow your equity. Like that's the two. There's some tax benefits too, but I kind of put those as like a icing on the cake. But like number one, you got to buy properties that are quality assets, that are in demand, that are good locations, that are going to attract tenants, and they're going to make you money. Like that's part number one. But the trick of real estate is putting money together with real estate. Like you got to have the money because most of us don't have like, hundreds of thousands of dollars sitting around. I know I did. And most people listening to this when they're starting don't either. And so the difficulty in 2023, interest rates have gone up relative to what they were. They used to be 3.5%. Now they're 7.5%. Like, how are we going to do this? Like, is real estate impossible? And the message I would say is like, you got to study history. Look back in the 1970s and 1980s. When some people got started in real estate in the early 1980s, interest rates were 14%, 17%, and they still bought investment properties. Like they still made money. And so you just need to know as a beginner, if you're just getting started, like it's not impossible. The numbers are going to be different, but you got to think outside the box. And I think we've kind of gone back to a normal market. Like this is like the time we had before with like 3% interest rates and just putting 5% down and making it cash flow. Like that was pretty unusual. Like that's not a normal thing. The way you got to think about it now is you're going to have to do something entrepreneurial to buy the deal better, to get better financing. So here's some ideas. Like if you're going to buy it at like full and pay full interest rate, 7.5%, it might not cash flow, at the full price. So maybe you got to buy that property below the full value. Like you got to look for deals that are fixer-uppers or deals that the seller's motivated, where they're willing to sell it for 10%, 20%, 30% below the full value. That's how I got my start. Like every deal I ever bought in my first 5 years of real estate was like, can I buy something for 70 cents on the dollar? Like that was my number. And you'd be surprised how much better a deal cash flows when you buy it at a discount. And I know you're like, people are thinking like, well, yeah, nice for you to say, but there's a low supply of properties and, people aren't selling properties. Like that's true. It's difficult, but like, anything worthwhile is difficult. Like, yes, it's difficult, but there's somebody doing it. Somebody is being successful buying investment properties at below value. Somebody is successful at doing other strategies. For example, not just buying it below value, but getting creative financing, getting sellers to finance the property to you at a 3% interest rate instead of paying 7.5% to the bank. Or somebody else is successful going to a private lender and finding somebody with some lazy money in their retirement accounts that's just sitting there making a couple percent and get them to load it to you at 6% instead. I know that stuff's easy, but that's the secret. Like that's the key. Like it's a hard secret you got to exit. It's hard to execute, but it's pretty simple to understand. It's like, it's real estate, it's money. If the cost of money goes up, you either got to buy the real estate at a lower price, or you got to go find an alternative source of money that you can get at a cheaper cost of money. That's the name of the game. And so if you like simplify the game, the fundamentals are the same. None of that's changed. Everything you've learned about real estate still applies. You just got to change your game plan. You got to go in with a different way to attack the other team, basically. And that's kind of, I'm happy to go into depth on any of those, but that's the approach you got to take. You got to figure out ways to kind of zig when the market's zagging and do different things.
Yeah, I like that a lot. Thank you. I have one more, and then I'm sure you have a couple, but I want to talk about your sabbaticals because I know we talked about them briefly, and like you hit a plateau, right? You want to go travel. Can you talk about lifestyle design? We talk a lot about real estate and building a portfolio, and I know you're at a point now in maybe your early 40s, and you've built this, let's call it 100-unit portfolio. You're doing a lot for your community, and you hit a point where you're like, I have a lot of life to live, right? Like if you go trajectory, right? Let's call it 30 plus years, something like that, whatever it really nets out to be. But Can you talk about the importance of like how you strategize this? It's not like you just magically have a trip and you can magically go for 6 months to Spain with your entire family, wife and kids. So I think that's really important to chat about lifestyle design. A lot of people just talk about numbers and money, but I think for us, like there's a reason why people do this, right? So tell us a little bit, maybe peek behind the curtain on your family life and why you do what you do.
Yeah, it sort of starts with the conversation we had earlier. Like you have some quiet time and you think to yourself, you're like, what would I do with my life if I could just wave my magic wand and do whatever I want to do? And for my wife and I, when we first met, like literally like the first date we had, we were talking about like, oh, you like to go abroad? Like you like to, like she taught Spanish. She had lived in Guatemala for a while. She traveled abroad. It's like literally our conversations that we really connected on were, oh, I'd love to travel too. Like I like to learn Spanish. That was my kind of corny pickup line with my wife when I first met her. Like, oh, you teach Spanish? I want to learn Spanish. Let's do this, And so it's like, as corny as that was, like that was the through line for us. And so we've always kind of gone back to that. And this is the important part is like, if a small and mighty investor, I feel like works it backwards from that. It could be irrational. It doesn't matter if it's irrational. It's just like what floats your boat? Like what's your why? Like what's important to you? What's exciting to you? And it could change over time. That's an important thing about your long, hopefully, if it all goes well, you live a long life, you're going to have seasons of your life. And so we're in the season right now where we have kids. And when we were in 2017, we had a 3-year-old and a 5-year-old kid. And so the season for us was like, we like traveling. My wife's a language teacher. I like learning foreign languages. We wanted our kids to be able to be fluent in a foreign language, in Spanish in our case. That was it. Like there's no reason, you don't have to justify that. You don't have to say that's a good reason or not. That's what excited us. That's what moved us. And so for us, taking a long trip, for us, 17 months was the trip back then. That was like the practical part follows that kind of irrational, whatever why you have. And so it makes the practical steps a lot easier because, for example, traveling abroad, we did it again in Spain. So kind of fast forwarding, the season we're in now is like, okay, my daughter was 11 when we left and the other one was 9. Like, how much longer are we going to be able to do these trips? I hope we can do more, but if she gets into high school, she's got other activities. This could be like, a season of our life that we just need to take advantage of. So let's prioritize that. And so it started off with just a conversation with me and my wife saying, hey, let's do another. COVID happened. We couldn't travel then. Right after COVID, I think 2021, 22, I'm like, hey, let's do this. Like, and she wanted to do it too, but I was like, I think we can do this. Like we can get away. Here's the things we have to do from a business standpoint. Our rental properties had done a lot better. Our income had gotten better and better and better. So like the earlier many retirements we took, the first one we did in 2009, like we had to save the money, like saving for a car to go on the trip. Like we didn't have enough passive income to do it. The 2017 trip, we had enough money to pay for everything in Ecuador, which is like a few $1,000s a month, maybe $3,000 or $4,000 a month. This trip in Spain, we're like, let's go to Spain. Like, let's live in the center of the city. Let's pay, a little higher rent. Like it's, $8,000 or $10,000 a month is good. We're good to go. And so the planning on the money side was actually a lot easier. So the practical things we had to do, for example, going to Spain, we wanted our kids to go to a local school again. So we hired a consultant in Granada, Spain, we ultimately decided to go to Spain because we wanted Spanish speaking again. We wanted to be in Europe. So I studied German in college and I had a friend in Germany I wanted to go visit. We wanted to go to Athens, Greece, because our kids had been reading some Rick Riordan books. They're like these kids books, young adult books that are all about like Greek mythology, but like in the United States, they're like in New Jersey, like meeting Zeus and things like that. So like they do all about Greek mythology. They're like teaching me. And I said, if you could go anywhere in Europe, where would you go? They're like, Athens. Like, oh, really? Why Athens? Like, well, here's why. Here's all these Greek mythology. And so we had some stuff like that we wanted to do. And it's like a real world learning experience. We're going to the museums at Athens. We're going to see, the Apollo, the Temple of Apollo, and this really cool stuff. And they're telling us stories, and we're learning. And we're having that experience together. And so for us, Europe was that. And living in Spain, we like walkable spaces, as I was talking about. Kind of my pet peeve is not being able to get around on feet or jogging or on your bike if you want to. And so we just chose to live in an urban environment. And Granada is a small city. It's not like a huge city, which will be overwhelming for us coming from a small town in South Carolina. So we lived in a 200,000 person city, Granada. We lived in the old part of the city, the Albaicín, where they have these little small streets that people have been walking on for thousands of years. A lot of history, cool cobblestones, use of the Alhambra, which is a big kind of fortress that people visit there. A good expat community, a lot of people who live from different countries. So we got to meet just so many interesting people. Our kids went to school every day and got their Spanish returned, got better again. And we went on adventures as a family. I wrote a book. So like there's a lot of stuff that went on, but it really is pressing pause on the real estate stuff. Like I still do real estate, but it was like pay some bills every week, talk to my property manager, bookkeeper. Like real estate is a very small part of my day-to-day life from a time standpoint, but it's 100% of the money. And I have some other, my Coach Carson business has grown kind of from a hobby to something that also makes some money, but I actually put that on pause too. I didn't teach any classes while I was gone. It was making much less active income from anything else except for real estate. And it was just sort of a cool reminder for me to see that journey of where it's come from a financial standpoint so that you can focus on these other things for a season of your life. And then now that I'm back, I'm back in ambition mode. I'm wanting to grow some other stuff and get back on my Green Crescent Trail and build those. And I want to, promote the book. And so like the ambition comes back, but it's kind of nice to have these little, quiet spaces that you then kind of re-energize you so you can go back and hustle again.
Yeah, Chad, you're the perfect person to talk to. Whenever I think about lifestyle design, I think about you because you were able to achieve that clarity of what is it that I really, truly, and honestly want to do. And I've thought about it myself. Like if I could wake up on a month and have a month to coach, to teach, to mold, to mentor, to help shape other people, bring value to their lives. If I could throw in some travel in there, if I could golf, if I could spend time with my family, if I could do some podcasts, like I mean, there's not much else that I would really need. And I always have thought to you to like, those things are not impossible. Like that living that life is not impossible. Now, is it super easy to buy 100 rental units? Like, no, it's not super easy to do that. Like, no, I don't think anybody would say that. But the design along the way and the taking the steps and the breaks and the moving and the maneuvering to figure out how to get there is really just a couple conversations or a couple mental clarity breaks away. And I've done it. I'm not great at it, but I think like I've gotten better at it. And I just, even right there, just working through that, like, what do you want your life to look like? Like, it's not, nobody when they're 90 who's about to pass away has ever said that they wish they made more money. Like, and it's hard to get that into a 30-year-old's head. It's hard to get it in my head, but that doesn't mean that you shouldn't take the advice of somebody who's been there, done that. Like it's nobody has ever said it. I mean, if they have, maybe they're a sociopath. I don't know.
Well, I've had to play tricks on my own mind. Just going back, because I think this is an important topic. I think you're not the only one. I'm not the only one either. You got to play tricks on yourself. And many retirements are the little tricks. Like for me, like my wife, like knows this. Like when we finally leave, like I kind of go, like there's part of me that's like, I don't know that I want to leave. I don't want to get off the treadmill. I don't, I like it. I like the race. But every single time I've done it, every single time I've done what you're saying, where you take a pause, whether it's a week or whether it's a year and a half, like when I finally get there and like take a deep breath, I'm like, I can't believe I almost didn't do this. Like, I can't believe it. Like that would have been ridiculous if I didn't do this. Like, but sitting on my deathbed, there's no way I would have regretted not doing this. And you gotta, you can trick yourself a little bit. Like sometimes travel to me is like, all right, I'm going on the airplane. I bought the ticket. Like I'm going, like it's happening. Like you got to do it. I feel like changing your location, whether that's just getting in an RV, whether that's traveling to Europe, whatever you do, like, or going to Asia somewhere, or just, like I think changing your physical location is my trick. It's like, all right, it's happening now. I got to rent my house. The house is rented. All those little details that happen, sort of force your hand a little bit so that you have the space to then figure it out. And even if it's a mistake, who cares? Like, all right, I made a mistake. I want to go back. Then that's a lesson too, right? It's all there's no perfect like aha moments. Like I still am trying to figure it out, but you gain more and more clarity as you go. Kind of like a sailboat is like tacking back and forth. Like you're trying to figure out like what's the distance, where am I trying to go? But you're never going in a perfect line. You're just always sort of stumbling along, figuring it out. And every once in a while you have these moments that you're like, I'm on purpose. Like this is what I should be doing. And those are the magic moments. That's why we do this.
Yep. 100%. As we wind down the show, one of the questions I want to ask before we finish up is like, okay, what's next for Chad? Like what does the next year, 2 years look like for you? I think you talked about it a little bit in the episode, but maybe share that. Hopefully our listeners can take something away from it.
Yeah, I'm figuring it out still. I mean, I'm getting this book out and the message out is important to me. Like, I feel like that was in my head for a long time. And I think, sometimes when you guys are in the communication business now too, like I feel like being a communicator, spreading this word, this message to people is like really important to me. And the Coach Carson platform, like you got like the validation I got from hearing you guys talk about the episode with the fire, for example, like that to me is like, that's my biggest professional reward these days. Like I'm a coach. Like I love teaching. And I was actually thinking in college, I probably need to be a football coach. That's kind of the direction I was going, but I didn't want to stick with, for whatever reason, I love football, but I was like, no, I like entrepreneurship, that this is my sport. Like I love taking something, taking nothing, turning it into something, and now you have this business or this income property or whatever. And so the satisfaction I have gotten doing that and learning it, getting to teach other people how to do that, like is just infinitely satisfying and fulfilling. And so that's kind of the era I'm trying to embrace. I've been reading a lot of John Wooden. I'm going back to my old John Wooden books, which is about, the Hall of Fame basketball coach, for those who don't know, from UCLA. He's kind of my role model for a basketball, for a coach. And I'm trying to channel a little bit of that and just be like, where can I be helpful? Like how can I focus on the process of success, and how can I help people with the details? Like I'm really getting excited about like the X's and O's. Like I want to teach people about maintenance. I want to teach people about like the practical stuff of financing and how do you manage your cash flow? Like all those little details that are, that's like the John Wooden would talk about basketball. He would teach his players how to tie their shoes so they wouldn't get a blister. Like that was the kind of details they would get into. Like I want to get into that kind of detail because I think people appreciate that. Like there's a lot of high level stuff, a lot of rah-rah, but who's going to teach you how to like actually do the details of success? And if you do those things and you put a bunch of those little details together, you'll then buy a property, then you'll buy 2 properties, and then you'll eventually have the income from those properties that will pay for your lifestyle. And so all these big things we've been talking about, they all like happen on this, the minutia level, on the detail level. And so I'm excited about teaching that, coaching it. I'm kind of open to the platform, the way it's doing it, but my podcast I publish every Monday is one avenue. The book is kind of a way to get the word out. And then I'm doing some stuff with like a community. I've taught classes in the past, but I'm working on having kind of an inner circle, like, kind of people who want to get a little bit more coaching from me. And I'm pouring some coaching and love on those people within a community and kind of testing that out. I'm just trying to figure out ways what's the best way to help real estate investors accomplish their goal, have financial freedom. Like I'm open to the how, but I know that's what I want to be working on.
Cool. I think that's great. And I want to, it's interesting you mentioned all that. Like, it seems like a lot of people are doing that these days, where they're taking their platform and they're like, for us, we interview people every Wednesday, right? And I'm like, we're in a couple of masterminds, but I feel like we have our own mastermind. And it's just like all of us, including you, like just people that we've had on the show. We're all fighting the same fight. And I don't know, there's something to it, but what I will say is you already have an archive of all the teachings. You already have an archive of all the podcast episodes with influential people and stories. You have both books. Now, I think the only thing is missing, right, is like, how do you package it all together and give access to you? Because you are absolutely right. There's no one out there, or maybe you didn't say this, I'm going to say this. There's no one out there that is giving the true X's and O's. We find ourselves every single time going back to your platform. And it's like, dude, it doesn't make you feel like you are, I don't know, up against this big, crazy, like big bad wolf, right? Like, it's like, oh, I can attack this. There's just small steps to this along the way. And I always feel good after. I'm like, okay, I can have my notepad out. You're teaching me the X's and O's. I'm writing stuff down. And then as long as I go take it and actually go do something about it, I'll be in a good spot. A lot of people will just take notes. They never take action. That's on them. Maybe that's where the accountability comes in from the platform. Just thinking out loud. But there's a lot of people less successful, way less than you, that are doing that. So I think that's a great move. I know a couple guys that would likely join that.
Yeah. Well, I also think I think Brandon Turner said this. I don't think he was the original person to say this, but I think this is the X's and O's stuff that you were mentioning. It made me think of it as like, nothing is really difficult. It's just a series of undefined steps that you haven't figured out yet, right? So like even, and I say this like I know a damn thing about rocket science, but like even rocket science is a series of, maybe it's defined steps that you have to knock off, right? And they might be difficult, but not as difficult if you break them down into concise steps. And that's really what the X's and O's do. And that's how we built our small portfolio is we need to do this, we need to do that. And it really does come down to like, what are you doing when you get up in the morning to prepare yourself for the first task? So I love it. Go ahead. Did you have something to add there?
I was just gonna say, I'm just gonna validate what you guys have done. I'm excited to see the progress you've made from the time we talked before. And I mean, you're students of the game. You're doing the work. You're helping other people now. Like I love it. Like it's really cool to see you doing it and progressing. And that's it's fun for me too. Like nobody goes on the same path. Like my path is going to be 100% different than your path, but there are clues like along the way. And I think that's what's fun is that the true entrepreneurs you meet who are generous with what they know. Like they're you guys are sharing it. You're on the show from the very beginning. You've been transparent about it. I try to do the same thing. And for everybody listening, like it's just this is a big circle. Like people, and if you hang around with the right people, the right entrepreneurs, they leave clues. They help each other. They want to see other people be successful. That's how I measure the type of people I want to hang out with. Like how generous are they with their knowledge, with their wisdom, with their energy. You know, that's because ultimately that's what it's all about. Like you're not gonna take the money with you, right? You're not gonna take any of this stuff. All you're gonna have is a bunch of moments, a bunch of relationships, and that's really cool to see what you guys are doing too. So I just want to celebrate what you got going on.
Thank
Appreciate
you.
it.
Yeah,
Thank you,
awesome.
Chad.
I think the one thing, the last thing I'll say is like you talked about you can't take the money with you, right? And there's a lot of different things that you can do with money, but the memories, right, are kind of the most important thing, and the experiences that you're going through. I want to bring this back to someone mentioned this to us the other day. It's like, and it's really stuck with me, is the relationship capital. You mentioned like the energy you give off. It's so hard to quantify that, but I feel the same exact way. You want to be around those people, and they just give you that energy. They feel good. You feel like their morals and their values are aligned, and you're also competitive, and you want to attack this world in the game that is all going through, but with the right types of people, not the greedy ones, not the ones that make your gut feel a little bit uneasy. It's like, no, this guy's got it going on. He's done it the right way. He's a family man. Like there's just a lot of synergy, I think, amongst us all. And that's why we're so excited to have you on today, man. Like just, it's been a long time coming, and thank you for coming back on the show. As we mentioned plenty of times throughout this episode, like you are one of our first mentors, whether you know it or not, virtual mentor. We feel like we've known you forever just based on your YouTube videos and your podcasts and your books. So thanks for everything you've done for us. It's been awesome.
My pleasure. Thank you guys. We got to meet in real life at some point. So let's make that happen, right?
Absolutely. Yeah, we 100% need to. What is the best way for people to get in touch with you though? If they want, maybe they want to join your coaching, future coaching program, maybe they want to join a mastermind if that's something, or they just want to learn the X's and O's from a good coach. What's the best way for people to get in touch?
So if you search Coach Carson anywhere, like Google, coachcarson.com is my website. And I have a newsletter that I send out every week, and I have a podcast I do every week. Those are like the regular things. So if you like to listen to my podcast. I'm on Apple, I'm on Spotify, I'm on YouTube. I put my podcast on YouTube as well. So that's one way. The other way is my email newsletter. I write that every week, and that's kind of behind the scenes. I share pictures, I share stories. As I was moving back from Spain to here, I was sharing like I had like 10 bags that our family was carrying into the airport, and I was sharing pictures of that kind of, it was kind of the interesting stuff that might not be, YouTube worthy, but I put it in the newsletter and put it on social media a little bit. So find me on that. If you go to my website, I have a newsletter subscription there. That's the best way to stay in touch. And I'll be announcing some of the group coaching stuff I do there, and some of the other kind of stuff that I'm excited about. And it really, if you've never heard of me and never checked it out, the book is a great kind of encapsulation of my philosophy. If you just read the book and that's all you need, that's awesome, man. That's cool. And if you want other coaching and more follow-up, that's great too. But the book is available on Bigger Pockets right now, but depending on when the episode comes out, it'll also be after August 22nd. It'll be on Amazon, on Audible, Barnes & Noble, everywhere you find books. And I'm sure you guys will put links to all that. But if it's this is something that I wanted a handbook. I wanted something that you could read through. You can be inspired because there's a ton of stories in there. I have 2 whole chapters of like stories of people at different steps of their journey. Every time I have a lesson, I'm telling a story about people. Some of them are my stories, but I try to share a lot of other stories as well. But really, ultimately, like the meat of that book is like the details. This is like the handbook. This is how do you negotiate? How do you finance? How do you eventually pay the properties off? When should you sell a property? When should you not? Like that, it's got that's what I'm proud of. It's a 330-page book, so it's pretty thick there. But it's hopefully readable enough that you can go back to it and pick it off the shelf and use it as a guide when you're actually going on your journey as a rental investor.
If it's anything like the first book, it's going to be a home run. So I imagine thank you for sending it to us. By the way, we got it. We will be reading it. And just to validate everything we've talked about in this episode, like Chad, if you guys are still listening here, I know it's the end of the episode. It's worthwhile to go to coachcarson.com. It's worthwhile to subscribe to his YouTube channel. It's worthwhile to buy both books and read them. I truly believe that. Like we have learned so much. Corey and I would not be where we are today without Chad. And I'm not saying this to promote a product at all. This is our life. This is what we've been through. And he helped us escape a fire in our property. It's one of the scariest things you could possibly go through as an investor. So, Chad, it's been an honor. It's been a privilege. Thank you so much. And we look forward to staying in touch.
Same here, guys. It was an honor to be on. Thanks for having me.
Thanks for tuning in this week to the Weekly Juice Podcast. If you liked what you heard, please leave us a 5-star review on Apple Podcasts, subscribe, and share with friends. The more ratings we get, the more ears we'll get on our show, and in turn, we'll be able to provide you with more high-quality guests. You can also find us on Instagram at Weekly Juice Pod, where we post daily tips and tricks and document our own journey towards financial freedom. Make sure to tune in every Wednesday to get your weekly juice.